Hi traders, welcome to this video. Today I want to talk about leading stocks. There is one sentence which I find very interesting about leading stocks, and it is: the job of a leading stock is to lead. And what does it mean? Well, a leading stock is leading the market. That means that the stock is anticipating the movement of the market. So if a leading stock is going up, maybe the market will follow shortly. If a leading stock is maybe consolidating or going down or topping, then the market maybe will follow. And the leading stock itself can be recognized by an outstanding strength. This is the reason why I always look at the comparative relative strength indicator. This is the first indicator here in my chart. I also made a video about that, so you can add the indicator to your TradingView platform. And the comparative relative strength indicator compares the movement of the stock with the movement of the S&P 500. And if the stock acts stronger than the S&P 500, this indicator goes up, and if the stock acts weaker, then the indicator goes down. And I want to give you an example, and this here is DocuSign. DocuSign is a leading stock for quite some time. And you can see one characteristic of leading stocks: they bottom before the market. You can see here in the third indicator, you can see the S&P 500, and you see here the correction from February to March. And what you can see is that DocuSign itself already bottomed before the market. You can see that the market, so the S&P 500, bottomed at the 23rd of March. And on that day, DocuSign was already up. It was already up 30% from the lows. That was on March the 23rd. And this is a characteristic of a leading stock. What happened in that situation? Institutions buy the best stocks as soon as they anticipate a bottom in the market. And DocuSign is on the top of their buy list, and they already buy into the stock or add to existing positions at the close or close to the bottom of the market. And you can see that the stock here, DocuSign, led the market. That means that DocuSign shows signs of a bottom before the market, and this is a great sign. I always look for something if the market is in a correction. I want to give you another example, and this is Netflix. Netflix showed the same characteristics. You can see the bottom was on 23rd of March. And Netflix bottomed at 17th of March. It is not important why that happened. You can have opinions about Netflix and DocuSign, etc. The only thing what is important here is that the stock is much stronger as a general market and already built a bottom before the market. And this is what you want to see in that case. You can see the same thing here on Okta. Okta had its bottom on, or its low on March 16. And the general market 23rd. So Okta is by definition also a leading stock. That does not mean that Okta will continue its leadership in future. It can also go down, and you can see that in the RS indicator here. You can see that the RS indicator is up on a new high while the market is in a correction. And this is a sign of leadership in a stock. If the market is going down, the price of Okta is going up, and the CRS indicator or relative strength indicator is going down, you can see a sign of leadership. And then the RS indicator goes sideways, which means that Okta follows the market in that situation. And then the market started a new up move, and Okta did not lead in that situation, but followed. And you can see that the RS indicator here went sideways for some more days, while Okta already moved up. And that shows that in that situation, Okta was not leading the market. That's not bad. You don't want to see that the stock or that the relative strength of the stock is going sideways for multiple weeks. In that situation, Okta will lose its leadership. But you can see that a few days later, the RS line went up, and Okta resumed its leadership in that situation. So to sum it up here shortly, for bottoms, leading stocks always bottomed before the market. They do not mirror all the moves of the general stock market, but you don't want to see that they lose its leadership over some weeks, so that the RS line is going down for a long time or going sideways for a long time. I also want to show you some tops in this video, and I start with Tesla, and you can see Tesla had a very nice blow off top here. That was an exhaustion run. You can see that here it went up very, very fast in a very short time, and then built something like a double top here. And this here was the high of the movement from Tesla, and it was already on February the 4th, and the top of the market was February the 19th, and that was the situation when Tesla built this second up leg of the double top formation here. And you can, if you see such price action here in leading stocks, that they had exhaustion runs, you can always try to, or you can always be sure that the top of the market is not so far away. Another candidate was Shopify. That was a very strong leader in the last market cycle. You can see that here on the strong rising relative strength line. And on that earnings day here on February the 12th, the stock had its top. And it was also something like an exhaustion run, not so strong as Tesla, but you can see this very big reversal candle here, and then this sideways action, and then Shopify moved down with the market and started to correct here. But one thing is also very good if you trade leading stocks. You always get a very good chance to exit the position, because it's often the situation that leading stocks correct, and they will correct strongly, much stronger than the market, but they also bounce or go sideways and give you a good chance to exit your position. You can see here the first down leg, and then you can see that the S&P 500 went sideways for some days. That was a situation when Shopify had its counter rally here, and then you also get a chance to exit on a good price here on a pullback, or if the stock start to correct again. Another example is Dexcom. Dexcom also had an up gap here after earnings. It was February the 14th, so a few days before the market had its top, but you can see that it goes sideways for some days, and this gives you a very, very good opportunity to exit your position at a good price. Because in such a situation, the institutions hold on to their positions, and they maybe also add some to their positions after the earnings. But you can see that the market was already in a correction here. And Dexcom had an outstanding relative strength. But in a correction, in a true market correction, 75% or more of all stocks will follow the general market. So in that situation, it means to sell at least a portion or the most of your Dexcom holding, while the general market is in a correction and Dexcom is going sideways. On the first look, it always looks like outstanding relative strength, and this is outstanding relative strength. But on the other side, you always want to be in sync with the market, and the market is down. Okay, to sum it up shortly for tops. Leading stocks often had their top before the market. Sometimes they have exhaustion runs or blow-off tops. Sometimes they go sideways. Why did this happen? Well, at one point, the institutions all had bought their positions. There are no buyers left, and in that situation, there is no strong enough demand for pushing the prices higher of a stock. And this is often the situation in leaders, and they will had its blow-off tops or its tops before the market. And sometimes you have this exhaustion runs, and sometimes you have something like here in Dexcom that it went sideways for a few days and try to show impressive relative strength, and then with a liquidation of portfolios from institutions, also the best leader will follow the general market. Okay, you can always see the strength of a stock. So if it's a leader or if it's a laggard, you can see that always in the relative strength indicator. I also made a video about lagging stocks, so the opposite of leading stocks. Make sure you also watch it in my YouTube channel. Okay, I hope this video helped you to understand that leading stocks had their bottom before the market and also sometimes top before the market. And if you want to follow me, you can do it on Twitter, you can do it on YouTube. And I also recommend to subscribe to my free newsletter. I send it out every Sunday.